take a look at the global market highlights and news for March 20th, 2014. The Feds do as expected. Janet Yellen's first press conference lacks fireworks, and UK unemployment claims tumble. Let's take a quick look at what is happening in the global markets now. European equities finished slightly lower Wednesday ahead of commentary about monetary policy from the U.S. Federal Reserve. The UK unemployment rate held steady, and the minutes from the BOE held no surprises, but the total claimant count dropped, helping the FTSE and the GBP. The Federal Reserve continued to trim its bond buying stimulus for a third time in a row on Wednesday and rewrote its guidance on when it might eventually raise interest rates. The moves would represent continuity at the U.S. Central Bank as Janet Yellen chaired her first policy meeting and a nod to economic reality. A reduction in the Fed's monthly purchases of treasuries and mortgage-backed securities by $5 billion each was widely expected, bringing the monthly total to $55 billion and keeping the central bank on track for a measured wind-down of the program as laid out by Yellen's predecessor, Ben Bernanke. The Dow, S&P 500, and NASDAQ were all modestly lower Wednesday after the Fed's statement. Although stocks did not do much following the Fed news, bond yields spiked. The rate on the 10-year Treasury note rose to 2.76% Wednesday from a 2.68% a day earlier, meaning that investors may be betting that a more stable economy will translate into stronger demand for riskier assets like stocks over bonds. Yields rise when bonds prices fall. Okay, in the foreign exchange market, the dollar climbed Wednesday after the Federal Reserve dropped its unemployment threshold for keeping interest rates low and said it would further reduce its bond purchases. The US dollar index, a gauge of the currency's strength, rose to 80.07 after the Fed's statement. The euro tumbled on the strength of the greenback to trade at 1.3840, while the JPY jumped to 102.40 yen from 101.41 yen late Tuesday. The pound fell to 1.6547. The pound had strengthened earlier after an improvement in monthly UK jobs figures. The Office for National Statistics said the number of people claiming unemployment benefits fell by 34,600 in February from January. The figure outstripped projections of a 25,000 drop. Okay, moving to commodities. Gold prices settled lower on Wednesday for a third session in a row and fell even further after the Federal Reserve decided to continue to taper its bond buying program as expected, but also said it won't rely on the employment rate to decide whether to hike interest rates. Gold fell as low as $13.31 to recover to trade at $13.33. Oil futures paired gains on Wednesday to slip back under $100 a barrel as a jump in weekly U.S. crude supplies reported by the government came in at more than double what the market expected, but matched the size reported by a trade group a day earlier. Crude oil inventory rose by 5.2 million barrels, pushing crude oil to trade at 98.80. This is Amy Anderson from Option Rally signing off. Follow me on Facebook. And of course, I'm waiting for your like below if you enjoyed today's Market Watch. Have a great day.